Hello, everyone. My guest today is Guillaume de Cugas. He is the CEO of Scoop.it or Scoop.it, a SaaS platform that helps marketers publish content using data science. He's been an entrepreneur since 2000, first with MusiWave, which was the first mobile music platform acquired by Microsoft, then Gujet, which was pre-iPhone mobile widget platform. Then he's been a startup and advisor along with an investor in Tedimus, which is email retargeting. It was acquired by Criteo. The Refiners Impact, which was cross-border accelerators in San Francisco. All right, Guillaume, are you ready to take us to the top?
Yeah.
All right. You've done a bunch.
Hi, Nathan.
Real quick, just because you have some exposure to music and first mobile platform back in MusiWave time. iHeartMedia, why is it going under?
Not sure.
Yeah, you haven't followed it closely enough, huh?
No.
All right.
Yeah, I left music. What was that? 7 years ago. I'm still involved. I have a band with fellow entrepreneurs here in SF. We have a rock band, so I'm still a musician. But I left the music industry 7 years ago, and I didn't look back too much.
What do you play, or are you lead singer?
I'm a lead singer. Yeah.
Oh, very good. I love this. We have cool. The cool factor of the show went up today. All right. Tell us about Scoop.it. What do you do and how do you make money?
So Scoop.it is, helps marketers, figure out what content to publish. We started as a curation platform. We were realizing that a lot of, for a lot of people, creating content was really hard, and curating content was an easier way to get content published. So we helped, filter the web for relevant stories. And more recently, we launched a new version of our platform, which is called Hawkeye, which helps you derive some trends, understand, get some insights on what content is out there to kind of guide your content strategy, help you understand what topics to engage and publish content on, what your competitors are doing, what influencers are doing. So we monitor the web for you so that you are better at content marketing.
This sounds like something maybe similar to a BuzzSumo kind of concept.
Yeah. So, BuzzSumo, they've done a great platform. They've done great stuff. What we added is we've done some natural language processing. So that, not getting technical, but that's artificial intelligence that can tell you, this is what the stories are really about. And we've added some measurements. So we derived a few more insights to look at your competitors, to look at influencers, to measure things that are meaningful for your content strategy.
Okay. And what's the revenue model? Is it a pure play SaaS model?
It's pure play SaaS. We've been toying with the idea of adding some professional services. We're, at the point where, it could make sense, but it's pure play SaaS for now.
Okay, great. And hey, real quick, Guillaume, just move the mic so it's not rubbing against your clothes. Just because we're getting a bunch of friction, I wanted to make this. Okay, that's perfect. Okay, good. So it's pure play SaaS. And then give us more of the history here. So when did you launch the company?
So we launched end of 2011. And the background was really around, realizing that we were going to be in a content-first world where online visibility was going to be determined by, the content you were going to be publishing. And we felt that it was going to be a big transition for a lot of companies out there. It was about becoming, a media outlet, a media brand. And we felt a lot of marketers are not trained to do this. It's a new paradigm. It's a new environment. And so we wanted to see whether technology could help. And we realized that, looking at what's been published out there, building a technology that can do that for you was going to be the natural first step. And so that's when we started. So we launched end of 2011, first as a free tool that anybody could use. We have now more than 4 million users of that free version. We launched a B2B version 3 years ago in 2015. So that's kind of the story behind the company.
And do you, the folks that want, if people are listening around, they saying, yes, I need this, I want to use it. I mean, what are customers paying you on average, would you say, per month? Are we talking small $10 a month or $10,000 a month?
So we have we have both. We started with a freemium model that, is more like for solo entrepreneurs or very small companies. And then, we realized that we needed a B2B version, an enterprise version that would be more scalable, that would have, more features. And we have, clients like IBM, Microsoft. So, very large companies. Our sweet spot tend to be mid-market companies, in that range. But we've been covering the whole range just because we started with a free product, then did freemium, and then the B2B SaaS version.
Okay, so if we just focus on B2B SaaS and I pin you down and say, give me an average, what would you, would you say an average is $1,000 a month, 10 grand a month, more than that?
Our average is about 10K a year.
Okay,
so in that range, but we have, we try to scale with larger companies with much higher numbers.
And what are the, when you look at your pricing plans and what your salespeople are pitching, what are the kind of value drivers that drive expansion revenue? Is it number of seats, number of pieces of content? What is it?
So for us, it's been, three things. The value metrics are number of seats, number of topics you want to cover, which is probably going to be one if you're a very small company, but could be hundreds if you're a large Fortune 500 company. And then we have a number of features which are also helping tier the products and separate them out.
Got it. And tell me more about that team. How many sales folks are on it, and what's the total size of your team to date?
So we're still pretty lean. We have pretty much relied on the free version to bring us leads. So our team is about 20 people. The sales and marketing team, that's about 7 people. And so, we're still having a pretty lean model. We've been trying to leverage the fact that with the free version, we get a lot of inbound interest. That's helped develop our brand, but also brings a lot of people who sign up for the free version for themselves and then realize they could use this for their company. And we use a lot of content to help them realize that there is more they could do with the platform with our more advanced versions.
Yep. And ignore, by the way, it's tough to ignore 4 million folks, but ignoring your free version and just focus on your B2B SaaS. How many customers have you scaled to on that thing since you launched it?
It's about 250.
Okay.
250 B2B clients.
That's healthy. If you've got 250 folks paying, on average 10 grand per year, what's that, 800-ish per month? You're doing north of 200 grand just on that line of business, right?
Mm-hmm.
That's healthy. And then you're just to be clear though, your freemium users, I imagine they don't all stay free. You have a smaller price, $10 a month plan or something for them?
Yeah, we have actually a $12 plan and a $79 plan for the guys who are more advanced, like more consultants and so on. Mm-hmm. And that's a part of the revenue as well. But to be fair, and that's been kind of the learning, we realized that I think if you really want to go after a freemium model, and I think there's the Dropbox IPO, which has been a lot of numbers coming out of this. You really have to have very strong numbers, and 4 million is good. But to have a very healthy freemium model, it probably would need to be 40. And so we started with freemium. We like the revenue we get from freemium. There's a lot of very happy customers on that plan. But we realized that for us, the opportunity was more on the B2B part with larger companies.
So would you ever consider selling off the individual part of your business or no?
No, but for a different reason. The technology we have that helps monitor the web, that helps with natural language processing, that uses a lot of the data points we get from those 4 million of users. They help us, think of it as they help us crowdsource what we call the relevant web. So the digital web, any website that publishes meaningful content, be it blog or podcasts or videos, we wouldn't be able to do that just on our own, just crawling the web on our own. Google can do that, but we have 40 million sources of content that we crawl on a daily basis, and the way we crowdsource some of the way we source some of those most interesting, more niche and longer tail sources are thanks to our users. So that's a very
they're helping
important aspect of our model.
They're helping you make your machine more effective.
Yeah. So, AI is just the fuel for AI is data. So the more data you have, the better your AI is going to be. And for us, that's been a critical part of our model.
Over the past 12 months, what portion of your revenue was made up just from your B2B model? Is that like significant? 80% is your B2B model and 20% is your freemium or your individual?
That's about 70% B2B.
Okay, got it. 70% B2B. So, look, if you're doing 200 grand a month on your B2B model and that's 70%, it's not insignificant, the money you're doing on the SMB stuff, but the key value you're getting there, you're saying, is not the revenue. It's really the data.
Mm-hmm.
Yeah.
Yep.
Okay. Take us through acquisition on these 250 B2B customers. How are they finding you? How are you closing them?
So, most of our, and it's kind of particular because, we've been relying on our free version to get a lot of inbound. So we do really, one thing from a marketing standpoint is we do content marketing. And that sounds a bit like, we drink our own Kool-Aid and because we're a content marketing software company and we do content marketing, but that's been really efficient for us. So our whole model is to get people, to discover us either through our free version and then we qualify them with content. So for instance, if you sign up for our free version, you're going to receive our newsletter, which is going to be marketing stuff. If we see you're not into this, you're not opening it, you're not clicking on it, we're going to leave you alone, and we're not going to, send you that newsletter anymore. So we give you a test of it. But if you're a marketer, you're going to find some cool, interesting content. So you're going to start engaging with that newsletter, with that content, and we're going to qualify you as a marketer, and we're going to try to nurture you all to the point where you're going to say, hey, maybe I should check out the enterprise version of Scoop.it. And you have people who kind of go directly. We do the traditional content marketing inbound playbook, where we do content that drives SEO, that drives qualified leads, that we convert, and then we nurture through marketing automation. But it's mostly an inbound model, leveraging the fact we have a free version that can bring a lot of leads.
So Guillaume, fully weighted CAC, you'd say, is about what?
It's about 7-8K.
Just on your B2B side.
Mm-hmm.
Got it. So you're then, if they're paying you on average 10 grand per year, you keep your payback well under 12 months, right?
Yeah, that's about it. I would say, it's about 1 year payback, something like that.
Yep. And bootstrapped, or have you raised capital?
We've raised capital.
Okay. How much have you raised?
We raised 13 million.
Guillaume, man, that 1x liquidation preference, man. How are you going to grow into that valuation?
Yeah, no, the story of the company is actually a bit more complex, because that cap table is something we inherited from a totally different project, which was the company you mentioned in the intro, the widget platform, Goodjet.
Okay.
So part of the money we raised on that company, and then restarted everything when we folded the widget business. Then took some additional funding following that restart. But inherited the cap table from back then.
Wait,
so complicated story.
Did you launch Scoop from scratch, or did you raise additional capital and you bought Scoop from somebody else?
No, we launched it from scratch, but with the team that had worked on Goodjet.
Oh, I see.
Which was the previous company. So we had some cash left from what we had raised for Goodjet, and when we started Scoop.it, we said, okay, we can use that cash to create that product. So we did all of that with our investors back then, and raised some additional funding once the restart was proved to be successful. So we haven't consumed the whole 13 million on Scoop.it. Part of that was on Goodjet.
I see.
And so we got to go to a point where it makes sense. So we're still very ambitious and want to grow a lot more than what we've done so far.
What are you growing at today, year over year? Just the B2B side of your business.
So on the B2B side, we've been growing about 50% a year.
Okay, got it. So you're doing about 130 grand on that side of the business 12 months ago.
Yeah, about that.
Something around there. Yeah. Okay, and tell me about churn.
So churn has been one of the reasons we've been moving up market is we've seen that with SMBs it's actually very hard to get the churn rate where we want it to be. And we've discussed with a lot of companies who've been in that space where, technology itself is, needs to be packaged with some skills and expertise, which, in the marketing space is often the case. So that's why we've been moving up market. We have more stable clients. We have, better longer term contracts, longer term opportunities. So that's been our strategy to address churn. We've been also working a lot on the product and seeing what we could do in this. But I think getting above 75% retention yearly on SMB is really hard.
Yeah.
Some companies manage to do this and have a very healthy model. But if you want to do, negative churn and upsells and so on, it's probably more with, larger companies.
So Guillaume, just to be clear, what are you at today in terms of churn on your B2B side?
Well, that's not something we disclose.
Okay.
But I think, it's a hybrid of, a number at which, to be honest, I'm not really proud of, which is more what we get on the SMB, and some, negative churn numbers that we're getting on the enterprise version of, on the larger segment of our client base.
So I'm trying to think a number you wouldn't be proud of. Is it fair to say on your enterprise side, your churn currently is north of 5% monthly and you're working on bringing that down?
On the so on the SMB part, we're north of that, yeah.
On the SMB part, okay. But just to be clear, you're not really focused on the SMB stuff, right? You're really focused on the B2B stuff.
Yeah, so the way and that's kind of depends on how you differentiate, you segment those. But when we look at our B2B version, we have, companies anywhere from 10 to, 200 employees. That's what we call SMBs. The enterprise, is like companies of 1,000 employees or more. Those are where, we're getting very optimistic on, getting, that's where we can get some upsells, negative churn rates, and so on.
Yep.
Companies, with 200 employees or less, this is still, where we're getting, a churn that's, we're not really proud of.
Yep.
And where, if you look at what companies like HubSpot have been doing, if their stories, their numbers, they started also with a lot of churn, and they've been investing massively to be able to retain customers on that segment.
Yep. What last question here before we wrap up with the famous five? On your enterprise side, what do you assume a minimum lifetime value is today?
For us, we're shooting to get 50K minimum.
Yep. It's about 5 years worth of value.
Well, enterprise we sell, if you're going to be a larger company, you're going to be higher than that. So, but yeah, we try to be at that range.
Yeah. Okay. Very good. Let's wrap up here with the famous five. Number one, what's your favorite business book?
So I'm not really strong into business book. There's a blog that I love, which is Tom Tungood's blog. I'm much more into reading his blog than reading any business book, to be honest.
Number two, is there a CEO you're following or studying right now?
So again, I don't have like a mentor or somebody I'm studying. I do a lot of mentoring myself, and I love to learn from, young entrepreneurs. I think I learn a lot more from, having interactive conversations than trying to read the fifth bio on Steve Jobs.
Yeah. Name one. Name one of these underground CEOs that's a young person that you follow.
So, it's more like the people I mentor through the accelerators I've been involved in. So, the Tedemis was one of the company that I've been
Which
involved
one?
at the board. Tedemis is one of the companies I've been involved. The one you mentioned that was acquired by Criteo. The two guys who've been running this company have been really impressive. There are two French guys, Antoine Devos and Alexandre Chavagnac, and they've been, starting this from scratch, bootstrapping it, ending up being the first acquisition of Criteo, and they've been doing fantastic work. So they're starting a new company now, and I'm following that up very closely.
Number three, what's your favorite online tool for building a business?
So recently I've discovered something called Full Story. I don't know if you're familiar with them.
Yep, I am. Good company.
Yeah, if you're building a product, it's really great. I think, I wished I had that for a long time, and it's really giving you. So for those of you who are not familiar with it, it's helping you understand what your users are doing with your product. So you can. It's almost like they were in the same room as you were, and you could see where they click, what they're doing, what they don't get, what they're able to do. So it's really an amazing tool.
Number four, how many hours of sleep do you get every night?
About 7.
Okay, that's good. And what's your situation? Married, single, you have kiddos?
I'm married, so I have a wife who's very disciplined with my with my sleep, and so she. If I were on my own, I'd probably be at 5 or 6, but she gets me to do 7 every night.
Good.
So.
And any kiddos or no?
3. Yeah.
3. Oh
kids.
wow. Okay. And how old are you, Guillaume?
They're
no
17.
You. How old are you?
Oh, I'm 47.
40. I was about to say you're not 17. All right, 47. And take me back to your 20-year-old self. What do you wish you knew?
So I think the number one thing I would say is, the ability to get out of your comfort zone is, where I learned the most. So, if I had to go back in time, and it wouldn't be about, hey, you should know this. It would be, go out of your comfort zone, explore, take some risks. I did that to some extent, but, I think, you cannot take too many risks when you're 25. So.
There you guys have it. It's impossible to take too many risks when you're young. So take them all. Take them all, Guillaume says. He founded Scoop.it back in 2011. They pivoted around at some different ideas, raised $13 million to build this. It's really content at scale. They'll help you surface what's working. They use their free user base of about 4 million folks to help train their machine, which fuels their B2B enterprise business, where they've signed up about, what do you say, about 250 customers paying on average 10 grand per year. So about 220 grand-ish per month just in that revenue stream, makes about 70% of their total revenue. Churn right now he's not proud of. They're working on getting that lower. The economics are looking good in their enterprise cohort, spending about 7 grand on CAC for a payback period of under 12 months. Again, lifetime value on these guys around 50 grand. Guillaume, thank you so much for taking us to the top.
Well, thank you. And great summary.